All right, greetings, fellow traders. So the market is kind of flat today after yesterday and Friday's brutal sell-off. S&P's down fractionally, NASDAQ is up fractionally, so I think we're all sitting tight, right, to see what the Fed is going to announce tomorrow. Based upon some of the stories I'm hearing out of like CNBC and the Wall Street Journal, I feel like the Fed may be leaking the news that they're going to increase by 75 basis points, trying not to surprise the market too much. I personally think that might be taken as a positive. We'll see what happens. All right, so I did some more trading today. Let's go over what we did. Okay, here's Procter & Gamble. Take a look. So I put this trade on yesterday, and look at it today. It is just getting smashed. Really rough day. So this trade that I put on yesterday, I ended up just taking the profits this morning. So here we have it. We put the trade on yesterday. We went ahead and we sold the June 24 puts, $135 strike price for $1.33, and then we went ahead and we bought the June 24 puts, $140 strike price for $303. And coming today, P&G is getting smoked, and we ended up booking about a 100% return on that trade in 24 hours. Not too shabby. Okay, we were long puts on Netflix, ticker symbol NFLX. It is down, what is it down? About 2% today. Just really, really miserable looking chart. I wouldn't want to be long that. Anyway, we went long the puts and we took profits this morning. So here we have it on June 2nd, we had bought the August 19th puts. That's $195 strike price. We paid $18.68 for them, and this morning I unwound them. I got $36 for them. So that's about a 93% return on that trade. Okay, here's Realty Income, ticker symbol O. We went with the bear put vertical on this one, and boy, it's having a lousy day today. It had a lousy day yesterday. It had a lousy day Friday. So this is working in our favor. This vertical worked out. So I ended up closing this morning. So on May 31st, we went ahead, we sold the July 15th puts. These were the $65 strike price for 79 cents. We had bought the July 15th puts, the $67.50 strike price for $1.65. Today, unwound it in its entirety, made about 98% on that trade. So this is ticker symbol AGL. And we went long puts. This morning, it broke through our level of profitability. But it's since come back. Look, it's up almost 2% on the day. So I'm pretty happy that we were able to get out of these earlier on. So I managed to sell half of these positions. You know, they're coming due. They're expiring this Friday. So I got to clean them out. And I do have some profits in them. So I went ahead. So we bought these on May 31st, right? So these were the June 17th puts expiring this Friday. These were the $20 strike price. We paid $1.75 for them. I ended up selling half the position today for $2. It's about a 14% return. I don't think we're going to make much more than that on it. So yeah, that's where we are. Okay, here is Agilent Technologies, ticker symbol A. We went long the puts. You can see here, stock's been in the downtrend. It came up, it retested its 50-day moving average, which is downward sloping, and the MACD histogram was rolling over. So we went ahead and we bought puts on this. And yeah, it came in, it was trading around 130. It's all the way down to 115 now. So really rough couple of days for this name. You can see here on May 25th, we went long the puts, right? So these were the July 15th, $120 strike price puts. We bought them for $6. I ended up selling them today for $9.05. It was done in two batches. I got $9.10 on the first, and I got $9 on the second. So I'm just taking the average there. So figure around $9.05. Represents about a 51% return on this trade. Here's Adobe, ADBE. I did this trade, kind of in the middle of the month of May. And this thing just ripped higher. This bull call vertical was very profitable for me, and I didn't take the profit. You see, I was asleep at the wheel. Take your profits when you have them. So what was a profit turned into a loss. You can see over the past 3 days down here, it got destroyed with the rest of the tech sector, right? So I unwound them for a loss. I had a gain, and now I have a loss. So we had originally sold, this is on May 16th, we had sold the June 24 calls, 410 strike price for $20.09, and we went ahead and we bought the June 24 $400 strike price for $25.10, and I ended up unwinding it today. I lost about 54% of my money on this trade, and it's a shame too, because I was up almost 100% in it and I didn't take it. Just asleep at the wheel. Stupid. Here is TE Connectivity, ticker symbol TEL. I was long puts in this one for a long time. I originally put this trade on April 18th. It's a long time I had these puts. And you can see from the chart, this is April here, and it was drifting lower, but it just really never did too much. Now yesterday it was down pretty good. Today it moved down. It's down about 4.4%. So these were set to expire this Friday, and I'm not sure if these are going to be profitable by then. So I went ahead and I salvaged whatever remaining capital I had in the idea. So here's TEL. Like I said, on April 18th, I bought the June 17th $120 strike price puts for $5.35. I ended up selling them today for $2.63. So I lost about 51% of my money. This, for some reason, this name didn't sell off with the rest of the market. It's actually hung in there pretty tough. So moving on, there'll be another one. All right, so let's talk about some of the new trades I put on today. So I did this bear put vertical on Moderna, ticker symbol MRNA. So you see this thing, pretty lousy downtrend. It came up and tested its 50-day moving average, which is downward sloping, and it just started to roll over. So I put this bear put vertical on. All right, so here's Moderna. Today we sold the July 8th puts, $110 strike price for $5.86, and I went ahead and I bought the July 8th puts. This is the 115 strike price for $8.02. So we're looking, we increased our downward bias in the portfolio. I'm banking on Moderna going down. You're going down, Moderna. Okay, let's take a look at IMAX, ticker symbol IMAX. I came in this morning, I saw a lot of option activity. The option volume rose about 11 times the norm. Didn't really get a clear picture of the direction. It looks like maybe there's a lot of spreads that are going on here, but certainly something around the June 17th. All the $15 puts and the $15 calls were all trading actively. I picked a side. I picked to the downside. Take a look at the chart. Looks pretty abysmal, right? So it did break through its 50-day moving average to the upside on great volume, but then it just broke down over the past couple of days. So I took a downward bet on this one. Lots of I probably should have did a straddle, now that I think about it. Anyway, I'm looking for this to go down. Okay, so I went long the puts. I went here. These are the July 15th puts, $15 strike price. I paid $1.04 for them. Okay, here's C.H. Robinson, ticker symbol CHRW. You can see here, this is unusual. The option volume rose 32 times that of the norm, and it's just concentrated huge around the June 17th, which is this Friday, and someone is loading up on the 110 and the 115 calls, and then also there's a lot of activity on the July 15th 115 calls. So someone out there is anticipating a move higher, so I followed. So here's CHRW, CH Robinson Worldwide. So you see here this morning, this stock really took off. There was news that they were looking to sell off one of their divisions to unlock value in the name. So it spiked, and then it came right back. But it's still up about 6% now, but it was up a lot more. So I'm anticipating that perhaps there was speculation of this deal going through, ran up, coming down. If there is an announcement that they're going to unlock the value in the company, this stock could take off. So maybe some folks are anticipating that this news is forthcoming. So with the CHRW, I went long the August 19th calls. These are the 110 strike price. Bought them for $5.80. All right, here's Arch Resources, ticker symbol ARCH. So option volume was 20 times that of the norm. And somebody was out there buying in bulk these August 19th calls. There's a 150 strike to 175 strike. So I took a look at the chart. So I got to tell you, man, this, given everything and where this market has been, this is a pretty solid uptrend, right? It's a pretty solid name. It's 50-day, the 20 days above the 50-day, they're both sloping upward. This thing is riding up its 50-day. It's been acting as support. It's sitting on the 50-day now, so I said, you know what? The trade makes sense to me. There's a lot of option activity, so I took a shot. I went long the calls here. So with Arch, I went ahead. I bought the August 19th calls. These are the $160 strike price. I paid $18.60 for them. Yeah, that's all I got. Have a good day, guys.